Binance Future Trading Tutorial, how to trade futures on Binance. Hello and welcome to this comprehensive Binance Future Trading tutorial. Today, you're going to master the essentials and the advanced tactics for trading crypto futures on Binance. We're going to cover how to analyze markets, use leverage wisely, implement proven strategies, and manage risk like a pro. So whether you are an advanced trader or someone that is new to futures and you're just looking to sharpen your skills, this is going to help you in being able to be a more disciplined trader. So let's get started. Now, first off, we need to understand Binance Futures and the advantages we can avail. Binance Future Trading allows us to leverage money and we are able to leverage our position. The best part about futures is that although there is a lot of risk involved, you still do have the ability to minimize risks with advanced tools and taking profits and stopping losses. So, with the flexibility combined with the deep liquidity and a wide range of supported assets, this is going to help you in ensuring the best possible positions in Binance. So, starting up, you're going to first need to have an account on Binance if you don't have one already. You're going to sign up and verify your account, whether it is your regular Binance account. If you haven't verified it, you're going to have to complete your verification. After that, you want to accept the futures terms, and then you need to fund your wallet. So for this, you're going to go into your basic wallet, and you will see your spot wallet and futures wallet is different. So if you go into your futures wallet over here, you will see whatever amount you have in your futures wallet, and you do have to fund your futures wallet separately. So you are going to have to fund this wallet. You can click on transfer and transfer funds from your spot or fiat wallet into your futures wallet. So from there, you can select however much you want to transfer. You can also transfer crypto tokens, and you will see your total margin balance. Then you will see your swap options as well. Keep in mind that your futures wallet is different from your spot wallet. So if you are someone that is using the futures market and you have a bad position, let's say, that means your entire futures account could potentially be liquidated, but your spot wallet is not going to be impacted. Because whatever margins you're taking, whatever risk you're taking, you do have to put up some type of collateral whenever you are taking that risk in a futures market. Now, moving forward, let's get started with actually navigating the Binance Futures interface. So to get started with the Binance Futures interface, we are going to go into the dashboard. Then you're going to click on your top and then click on futures. And you have two types. You have USDM, CoinM, and then options. We're going to go into USDM. Now, the key components of your trading view are going to include your order book, which is going to visualize real-time buy and sell orders. Then you have your trading view chart where you can apply indicators like moving averages, RSI, and Bollinger Bands to support trends and entry points. Then you have your positions panel, which is going to monitor open trades, margin, and profit and loss. And then you have your order entry where you can choose your order type, contract, leverage, and risk controls. So successful futures trading is going to rely on a lot of different technical analyses. To make sure you're able to do that, you do need some information on the basics. So starting off, you guys can see we have our basic trading view. We can turn that into however much time, hours, 4 hour, 1 day, 1 week. Then you have your general info and then trading data as well. We're going to go back into our chart and you can click on your trading view here to see the overall perpetual price. Now in this, you do need trend identification. You can use moving averages to determine the overall direction. Then you have momentum indicators like RSI and MACD, which help in spot, overbought, or oversold conditions. You have support and resistance where you can draw horizontal lines to mark key price levels for entries and exits. And you have chart patterns, so you can recognize formations like triangles, flag, and heads and shoulders for a predictive signal. Now, within the futures market, you have your future pair selected, and on the right side of your screen, you're going to see different ordering types. So the order that you place on the futures market is not just any order. It has its own types, including a market order, limit order, stop limit / stop market order. So starting off with a market order, this executes instantly at the best possible price. Let's say we have BTC and USDT. You guys can see the available amount of USDT I have and the potential price. Then I can choose how much I want to spend, as well as if I want to take profit, stop loss, and if I want to buy or sell at this position. So currently the price is 94.64.7. So let's say if the price drops to 94 like this, then I want to buy. Then I would click on buy long, and this would put in our pricing like so. Then from here, we're just going to click on over here. So our minimum quantity is going to be 189 USDT. From there, we can proceed with our order. Keep in mind that this account is not a funded account, so we can't actually trade. But from here, you can proceed. Now, in this, within a futures market order, you also have your second type of order, which is a limit order. This is going to be executed at your given price. So this is a market order. It is going to be executed instantaneously like this. But after that, you can go ahead and go into your limit order. Now, whatever price I enter, I can click on buy long or sell short like this, and then I can proceed. But if I place my limit order, I'm going to determine the price at which I want to buy it at. And this could be a price, or it usually is a price that is lower than the current market average. Then if you put in a stop limit / stop market order, this triggers when the price hits a specified level. This is ideal for breakouts or protection. So if you go into the stop limit order, you can see even in their info box, this becomes a limit order when a specified stop price is reached, where you can specify a price to activate your order. And then if you go into the stop market order, this becomes a market order when a specified price is reached, and you can specify your target price to trigger your order. Now, beginners should start with a lower leverage to minimize their risk. 2 to 5% leverage is honestly what you're going to be using when you're starting out. You don't want to go for higher leverages. Any leverage higher than 10% increases your risk for liquidation. So make sure to always manage your risk levels. Now, you also have cross and then isolated. This is very different. In cross margin mode, all your positions are in the same margin asset share, and they share the same asset in a cross margin balance. So if you are in liquidation, your assets full margin balance along with any remaining open position will be forfeited. Whereas in your isolated margins, you are going to have isolated risk management. So this does risk the amount of margin allocated to each trade, but if the margin ratio of a position is 100%, the position will be liquidated, but margin can be added or removed to positions when you're using this mode. Mostly people are referring to cross margins when they are trading. On the top, you even have your asset mode, including single asset mode and multi-asset mode. In single asset mode, you have USD and futures trading by only using the single margin asset of the symbol PNL. This supports cross and isolated, whereas on multi-asset, you have multiple margin assets, and your PNL can be offset among the different margin asset positions. However, this does not have isolated margins. Now, from here, we need to understand one final thing, which is going to be going for a long versus short. So you long or buy when you expect the price to rise. Let's say the current price is 64.744. I expect the price to go high, because when you're trading futures, it does not necessarily mean you're always going to be buying or selling. You're actually predicting the price. You're basically doing regression, where you're predicting if the price is going to go up or if the price is going to go down. So from here, you can click on buy long if you think the price is going to go up, and if you think the price is going to go down, you're going to sell / short that particular trading pair. Now, let's go ahead and take an example. So you're going to analyze the BTC chart or whatever, spot pair you have selected with a margin cost and a strong volume. You can place your limit order by selecting the size and the price. Let's say we want to buy at 100 like this, and you can choose the size, how much you want to buy, as well as the size or the number. This just depends. Let's say I want to buy just 1 BTC at that price. And then we can click on buy long like this if I expect the price to go up or down. Now, keep in mind that if you're placing a limit order, it is usually going to be slightly above the support, and you can set your leverage to like 3 times. And you do want to take profit at resistance and stop loss just below your support. So make sure to check this option to enter your advanced trading position. Then you can monitor your position and adjust your take profit stop loss as the trend is going to develop. Now, there are some advanced trading tools and automations like grid trading, time-weighted average prices, multi-symbol trading, customized alerts as well. So in grid trading, we are going to be discussing all of these strategies. So if you are someone that is looking to go for TWAP, so TWAP is a direct option. Now in TWAP, you have time-weighted price average, where it splits large orders into small trades over time to minimize the market impact, and this is useful for high volume traders. Usually that's not going to be your average Joe. This is usually for seasoned traders that are going to be trading in large volumes. Then you have the multi-symbols trading page where you can monitor and trade multiple pairs efficiently. You also have customized alerts for notifications. And then you have grid trading, which automates buying and selling orders within a defined price range. This is ideal for sideways or volatile markets. So what this is going to do, let's say we're going to go into USDC perpetuals, and what it's going to do is that within a certain price range, let's say I set the price to be, this was like the lowest price of the past 4 hours or 1 day. Let's take a look at that. And this is, the current price trend. It has gone down and then just gone straight ahead. So let's say I don't expect a lot of changes, but I still do want to make trade on it, make a profit on any changes. So what I can do is I can automate a buying and selling orders within a price range. So our lowest price was here, and this was like our lowest price, which was like 76, 79. And then this is our highest. So what I would do is I would give the automated bot these price ranges to buy low and sell high, and it would automatically be buying low and selling high over and over again. Now there are some other advanced trading strategies like scalping, trend trading, arbitrage, and hedging. So you can use things like capturing small, frequent profit from minor price moves, which requires a quick execution and strict discipline. Usually it works better when you have these more volatile coins that are going to be changing prices within 24 hours, within like a few minutes. And what that does is that this is just going to make it really easy for you to be able to manage a portfolio that is not very stringent and also holds a lot of diversity. But this requires you to basically be a day trader. You have things like trend trading, where you enter trades in the direction of the prevailing trend, use trailing stops to lock in gains as the trend continues. So if I see the price going up, I put in my trade for buying long, and I can add a trailing stop in between, which basically means that at a certain price, when the price goes up to a certain extent, I start to cash out. Then we have arbitrage, where you can exploit price differences between Binance and other exchanges between the spot or futures market. Then you have hedging, in which you can open like opposite positions to protect your spot holdings from adverse moves and reduce your portfolio risk. Now, whenever you're doing futures trading, whether it's futures or even if you're just doing leverage trading, so if you're someone that goes into direct margin trading, which is very similar for a lot of people to futures trading, then you do want to make sure to use some risk management strategies. This includes going for position sizing where you risk only 1 to 2% of your capital per trade to survive losing streaks. You want to set up advanced take profit and stop loss orders. And you want insurance fund and liquidations, where Binance's insurance fund helps cover losses from liquidations. And you want to stick to your plan and avoid revenge trading. And don't let, greed dictate your decision if you ever feel like you are going to make a bad one. Keep in mind that if you are futures trading, it's not an easy game. You cannot just master it in a day. You need to track and analyze trades. You need to do some demo trading and practice strategies using the Binance Futures testnet. You need to use the Binance Academy and diversify, stay informed, and adapt to market changes. So if we just go on ahead and try to start trading on a whim, that is not going to be an easy game for us. So let's say I am going for futures trading, but I want to automate a bit of it. You can go into the top, you will see trading bots, and you can click on futures grid. When you do that, you can build your own bots as well as use AI. Now, if I click on AI, it's going to give me different strategies as well. So long, short, as well as neutral. Now, this also shows us the time range, what I should be expecting, as well as the profit of each particular grid. Now, from here, you guys can see I have short to mid-term sideways. We have mid-term fluctuations as well as long-term fluctuations. We have long as well as short strategies. We have popular ones as well as manual ones we can set up. You can set up a lower price range and an upper, the number of grids, and the total investment you want to do. Now, if you go for popular ones, you can take a look at the top ROI and basically copy trade other traders. But if I want to put in my manual one, currently the price is 94,700 and something. The lower price I'm gonna go for is 93,500. I think that's going to be a reasonable expectation. And then the upper price, I don't want to bet more than like 95,500. And then we can choose the number of grids. This is, you guys can see it's going to visualize it for you as well. And let's say I want to increase my price range, so 92. And you guys can see I've expanded it. Then you can choose your total investment that you want to do. And from here, you guys can see the minimum USDC amount is on this grid is $96. And then below that, you will see your quantity order, total investment, as well as estimated liquidation price, short, as well as long. And then you have your margin mode, where you have cross or isolated. Then you have your trailing up, trailing down. Then you also want to turn on your take profit stop loss triggers, because that is again just going to provide you with another safety net in all of your positions. You can also create a grid trigger where it's going to be active once the last price or mark price chooses is going to reach the point that you choose. And then you can proceed with building the rest of your futures bot if you are looking to just play the bot game using the futures market as well. Now, regular futures trade, again, they have market order types, and we've covered some of the basics, but we do have some more complicated ones, which is a trailing stop, which we just used in our bot. This is going to allow you to send a preset order to the market when the market swing takes place. When the latest market price or mark price reaches the highest or lowest price after an order is submitted, this triggers the order to be executed as a market order. Then you also have your conditional orders. So this will become a limit or market order when they hit a certain trigger price, and then they will be shown in the list of conditional before being triggered. When triggered, they will be moved to basic. So let's say I only want to trigger a certain price point. Let's say I want to buy XRP when it hits $1. I would put in the conditional pricing, and after that it would become a limit or a market order. And this just helps you in just setting up your own boundaries to how you want to be executing trades. Then after that, you have post only. which refers to orders being added to the order book and not being executed with a pre-existing order. Then you also have scaled orders, where it allows you to split an amount into multiple suborders to minimize market impact. So with this, these are all the different things you can do within the Binance Futures market. Again, you have futures data as well, where you have the real-time funding rate, the funding rate history, the insurance fund history, indexes, arbitrage data, delivery data, and trading data, all of which can be really helpful in analyzing market trends. Not only that, you have different options as well as different futures or perpetual trading as well. Keep in mind, in your futures market, the risk of liquidation is pretty high, so always go through the education first and go through the investment tools available to you by Binance before you jump right into larger risk positions. And always value the risk, and keep in mind you shouldn't be investing more or trying to play more in the futures market when you're not willing to lose it. So if you ever do that, you do want to set up the size distribution as well as good nets under you, which basically means set up your take profit stop losses to ensure no emotional trades are being made. And always take a look out for your margin ratio with your maintenance margin and your margin balance. Now, after that, you even have this futures masters arena. This has a price pool of over 450,000 USDT. And people can join the Masters Arena, collect stars, and win rewards as well. Now, this is not going to be for the beginners, but if you are a seasoned expert, you can participate. Now, if you are someone that is looking to do a bit more with their futures earnings, or if you are someone that does not want to explore that kind of risk just yet, you can always trade in the spot market, which allows you to trade in a more realistic or simpler way. Additionally, within the spot market, you can even create trading bots, which are not going to be using or leveraging any risk, which is just going to make you feel a whole lot safer and easier in trading. Then if you take a look at USDM or Coinem futures, you can always go into your market bots and build bots for those. But if you're someone that is looking to invest their crypto earnings or make their crypto earnings work for them, then you can go into the earn section and then go under overview. Over here, you have several different options to expand your earnings via Binance, including Binance Earn, where they have multiple different types of products, including flexible and locked savings. Binance Earn works on a simple principle. You are going to put in your money into their liquidity pool so Binance as a platform can provide liquidity to its users. For keeping your money in the pool for a predetermined amount of time, you're going to receive an interest rate. It's pretty much like depositing money in a bank, it's just crypto and Binance. So if you scroll down, you will see principal protected products. Keep in mind that the principal amount of the digital asset is protected. The fiat value is going to be subject to the price of volatility, and these fluctuations may affect the value of your digital asset. What does this actually mean? Well, let's say I put in Ethereum, okay? And I put it in a flexible account, and I put 1 Ethereum, which is worth, let's say, $2,000. The 1 Ethereum is going to be returned to me as it is, but if the price of 1 Ethereum drops from $2,000 to $500, I am not going to get my $1,500. That is not going to be the case. I'm only going to get my 1 Ethereum, and if the price has dropped since that particular moment in time, even if I'm getting like a 3, 4, 5, 10% APR, I'm still going to lose money. So the strategy with these simple earn tools, and you're going to find this across, unanimous across all of your simple earn tools, is that people are always investing in USDC as well as USDT. Why? Because these earnings are pretty low risk. Because these are currencies that are backed, or coins that are backed by the US dollar, which basically means that people or these currencies are not going to drop in value all of a sudden unless the dollar drops in value. But if you take a look at the principal protected, it's going to be effective for this because the value of USDT or USDC is pretty much going to be the same when you take it out. So you can click on subscribe, you can go into flexible and locked. Now flexible has different product rules and locked has different. In flexible, you put in the money after a couple of hours, the accrual is going to start and you're going to basically start making interest on it. And then you have your first distribution after 1 day or 2 days, and that is your fixed rate. And this is your flexible rate. However, if you opt for a fixed fund like this, you are not going to be able to take out your money until the 30 days have been completed. So after your order is submitted, it's matched, you will start enjoying the fixed interest rate and receive the rewards within 24 hours after the expiry, and you cannot reward your earnings earlier. So this is again a really great way to multiply your futures trading earnings with Binance. You even have advanced earning tools to yield investment, and you even have access to loans. And moreover, you even have an affiliate program on Binance, which can help you in earning commissions. But other than their affiliate program, they also have a referral program where you can earn upwards of $100 by inviting a friend. You even have their launch pool, mega drop, mining pool, travel rules, charity, BNB chain, Binance wallet, fan token, and paying tools, all of which can be really great ways for you to explore more about Binance. Now keep in mind that when you're holding your assets within Binance, they are technically held by the exchange. So when you are done with trading, it is recommended to transfer your funds onto a wallet instead, because a crypto wallet and a crypto exchange are two very different things. So do keep that in mind. I hope you guys found this video helpful and you are now able to get started with futures trading on Binance. If you did find this video helpful, make sure to leave a like and subscribe to our YouTube channel for more content. And if you have any questions or queries, you guys can leave those in the comments. And if there's anything you would like me to know, you can also leave that in the comments. I hope you guys found this video helpful, and if you did, make sure to leave a like and subscribe, and I will see you guys in the next video.